Welcome back. You're still tuned into Chartbusters on CNBC-TV18. Let's get stock specific now. Chalet Hotels will acquire the Dukes Resort in Khandala for a sum of 133 crore rupees and reposition it as an upscale green lifestyle resort. To learn more about the company's plans with this particular property, the acquisition, and get an outlook for the business as well, we are now joined by Sanjay Sethi, who's the Managing Director and CEO of the company. Mr. Sethi, good morning. Thank you so much for joining us. Well, those who live in Mumbai, of course, know very well about this Dukes Resort. You've gone ahead and acquired it. Tell us, what is the net outflow for the company? How will you be funding it? Do you have enough cash in your books, or you will be taking some debt?
Good morning. And, firstly, I come to you from the Dukes Retreat today. Great resort, iconic in nature, great weather. And we already have some waterfalls due to the recent rains visible. In terms of acquisition, yes, we're very excited about this Dukes Retreat acquisition. It sort of begins our journey into the leisure and resort spaces for Chalet Hotels. It's been acquired with currently 80 rooms. We have an expansion plan which will increase the capacity by 50% or more. And of course, there's upgradation that's required. Overall, we've acquired this for 133 crores as the enterprise value, and there was cash on books, so the overall cost to us is 156 crores. It's being funded by internal accruals from the business this year. That's where we stand today.
So there was 23 crores of cash on the books. Yeah, so there was 23 crores of cash on the books, right? Okay, so your net outflow is...
change, yes.
Right, so your net outflow is close to around 133 odd crores, all of that funded internally. You said that you plan to take this up to a 120 room property from 80 rooms that there is. It requires some expansion, upgradation and renovation. How much more money are you going to spend on that? I ask this mainly because I'm just trying to get your overall investment in this and the timeline by when this will be ready for everyone to visit in its new avatar.
Sure. So we continue to operate till we start work on the site. So timeline of construction will only be from October onwards. It'll probably be about a 12-month renovation and expansion plan. So we should be ready by September of the year after that. But we'll do it in phases. It's not going to be shut down. So it'll be operational throughout the renovation and expansion period. Also, the expansion is on a different site, so it doesn't affect the existing hotel. The total capex outlay is still being worked out, but it is going to be roughly around 10 lakhs a room on the renovation side and roughly around maybe, say, 50 lakhs a room on the new room side, which is the additional 40 to 50 rooms that we had.
Okay, all right. So that is the additional capex that you will be doing on these rooms. Can you tell us what is the current revenue, average room rental and occupancy of the property? And after acquiring it, what do you plan to take it up to?
Sure. So currently, I think it's going to close roughly around 33 odd crores revenue with an EBITDA of little under 14 crores, I think, around in that range. We see this position at the upper upscale to luxury segment. The average room rates of the hotel this year are about 8,600. Occupancy is around 70%. We see this being repositioned at the 12 to 15,000 rupee average room rate positioning post the renovation and expansion. We'll be able to get yields significantly or comfortably north of 20% IRRs on a project basis.
All right, I get that. So, just doing some rough math, you said 10 lakh rupees per existing room is the renovation that would come up to about 8 crores, given it's an 80 room property, plus another 50 lakhs for adding another 40 more rooms.
25 lakh crores.
25 crores is that. So that's roughly 33 odd crores.
There is some public areas. Yeah,
some public areas. So say 35 odd crores, 35 to 36 odd crores is what you would be spending on the overall renovation.
It will be closer to 50 crores because we want to enhance the project also.
All right, closer to 50 crores. Right. So your net investment would be close to around 180 crores, on which you expect an IRR yield of 20% is what you said,
right?
North
of 20%. Comfortably north of 20%. Yeah.
Yeah, you've also acquired, the land, Sonmil Industries, along with the building which currently exists. So just wanted to know if there is any other land around the property which has been acquired with this deal as well, which Sonmil holds, or is it, okay, that's not the one. And
so it is Dukes Retreat. So Sonmil owned the land. Dukes Retreat was on the asset, the hard asset of the building. we acquired the two companies which have now 100% subsidiaries of Chalet Hotels Limited.
So there's no freehold land which is around the property right now, which you've acquired along with Sonmil, right?
We get some extra FSI along with this, so we'll have the potential expansion of going beyond the 130 rooms that we have sometime in future. We'll have about 55,000 odd square feet more that we can develop sometime in future.
Okay. Mr. Sethi, this is about the acquisitions that you've made. Do you have any more acquisitions planned, something that you have on your radar? We can hear about it in FY24?
So we've got a lot happening on the project side, right? As you know, that we've about to complete in the next quarter the 168 room in Hyderabad, which is a Westin. We've added 88 more rooms at our Novotel in Pune. We've got a new hotel coming up in Delhi with 400 rooms. In addition to that, we've got potentially a new hotel of 180 rooms coming up in Airoli in Mumbai. And then we've got the two office projects which are near completion, and one in Bangalore, one in Hawaii, in Mumbai. So yes, we've got a lot of capex work that has been happening over the last 3 or 4 years is now coming into a stage where they'll start getting monetized now.
All right. Just a couple of quick questions before we let you go, Mr. Sethi. Out of curiosity, will you run this as a new brand, or will it be one of your existing brand partners? You have Marriott, Novotel, Renaissance, a bunch of them.
Well, still work in progress. More and more going forward, we see us definitely operating the hotels. In some cases, we might take brand partners as a franchise arrangement. But we see ourselves running this hotel either with our own brand or as a franchise. It's something that we'll decide over the next few months. You know, we have about a year or more to relaunch the project post-renovation. So we have the liberty and the luxury of time.
So last question before we let you go, Mr. Sethi, about the current business. What is the expectation for FY24? How has quarter 4 been? Also because calendar year or FY24 is very happening with IPL, the World Cup. What kind of occupancies are you expecting?
I can't disclose numbers, but I think you picked the right word when you said happening quarter.
Okay, all right. It'll be happening for, of course, the hotel industry and everyone who is a cricket fan as well. Thank you so much, Mr. Sethi, for joining us and detailing to us the plans with this acquisition and the outlook going forward as well. That's the word coming in from Chalet Hotels. So with that, we'll move on and take a short break. But of course, the big story, mutual fund investments where not more than 35% is invested in equity shares of Indian companies will now be deemed to be short-term capital gains. So we'll get you more on that after this short break. So stay tuned for that.